now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, good morning and welcome to Financial Fitness Friday. I'm Rich Rosso here with, I look really short from the YouTube people. Listen, YouTube people, I didn't lose, I can't afford to lose any inches whatsoever, but wait, here we are. Welcome to Financial Fitness Friday. Listen, we got the radio and we got the YouTube. It's multi-dimensional. I'm Rich Rosso, CFP, with Danny Ratliff, CFP Squared. Regardless of what Lance said, I'm here today. Lance said yesterday that I wasn't going to be here today, and I was like, great, I have the day off. And Brent goes, no, you don't. No, you don't. I don't know what Lance is drinking. That coffee is really getting to him. Well, so one of the things, we're going to talk about a lot of stuff today, but I will say, futures are up first. We're up over 100 points. We seem to be breaking out of the malaise, Danny. And if there's any lesson for 2023 for investors, is you cannot be completely out of the market, right? Any of the things that could have derailed the market in the first half of the year, and it didn't happen. Yes, I understand there's 5 to 7 stocks driving a market. But look at how we have come out of this bear market. NASDAQ up over 30%, right? Best first half of the year since the 80s. Not to say that this will last, right? But people that are so confident, Danny, to blow up their allocation. Listen, I get it. The Fed's raising rates, bonds competing with stocks. I get all. There were so many obstacles. This is, again, one of the most hated skeptical markets for many investors. But if you're a longer-term investor, you have to understand, this is one of the best lessons to understand, is it's never all in or all out, isn't it, Danny? Because I've had clients that'll say, we got to get all out. And it just never works. And then I wait for the clients that have been all out to tell me to go back in, and then I know I should be out, right? Because for the most part, most investors are really great contrarian indicators, including professionals. So you always have to have some element of stocks in your portfolio if you're that kind of investor. Now, some people don't have an appetite for stocks. We totally respect that. And there are a lot of other things they can do. But if you are what you consider an equity investor, man, if this year doesn't teach you so far with all the obstacles that you can't be all out, you may reduce your allocation. I don't know what year will ever be the poster child as good as it has been so far. What do you think?
I do. I think that's a big part of it right now, right? Is that understanding that markets are going to do things that we can't rationalize a lot of times, and we're looking at data, and it's conflicting. We did get revised GDP from Q1 that was actually a little bit better than anticipated. We're getting more inflation data that's coming in, and while some of this would suggest that things are slowing down, others are showing that the economy's been much more resilient than anticipated. But I think that we can do ourselves a little bit of a disservice as well by looking strictly at a specific index. So, when we look back and over times, I think it's very difficult to piece together and understand how a broad portfolio works, especially in an environment where market breadth has been extremely poor. I mean, participation in this rally has not been good. And in fact, we've never come out of a bear market with this poor participation. So
that's as far as, what do you mean as far as just the tech stocks and anything attached to AI that's driven markets higher?
That's correct. So there's more stocks that are actually declining than advancing, and so that is problematic longer term and suggests that maybe this is where we do need to provide a little bit or use some caution. And there's a lot of flashing yellow lights that are still there. I mean, we still have the yield curve extremely inverted. Leading economic index has still been negative, 13 consecutive months now.
I've seen. I don't understand. I've seen Danny blow through yellow lights. You've never seen that. Go ahead.
Now, but there are.
I have not seen.
There are a lot of those just bigger picture things that we historically have looked at. Now we've talked about how maybe a lot of this has changed in a sense from the pandemic. I mean, obviously we've seen the labor market has been different. What's going on with all the different areas at the moment that historically would look one way, look a little different today. But, so I think we can do ourselves a disservice as well by not understanding our own financial plans, what our hurdle rates need to be. And this can help kind of provide a ballast, I think, Rich, in the sense that people need to understand exactly what they're investing for. Bring it back to what those objectives are. And so, like last year, I feel like I had a pretty good year all in all mitigating risk. But I had somebody come and I've had a couple people like, well, Danny, there's this one area that did really well. Why are we not just all in on that one area? And I said, well, okay, well, let's talk about this. What did that one area look like the year before? Right. What does it look like year over year? And what type of risk do we have to take to get these types of returns? And that's one thing I think that, putting that into some type of perspective, understanding, kind of what's going on underneath the surface is extremely important right now. Because you want to get the NASDAQ returns, that's great. Last year, most people didn't want to go near that, right? You didn't touch it with a 10-foot pole. But now it's like, whoa, hey, man, look what's happening. And I get it. And look, we have investments in those areas as well, but still extremely expensive, still a lot going on. And like we just talked about, and Lance has talked about, quite a bit over and over and over again. In fact, he's got an article on realinvestmentadvice.com about market breadth. You could type that in the search, and it gives you really nice perspective on it and what to expect. Do we see a sector rotation? And so here's the problem I think that people are facing is that they look at NASDAQ returns and they're like, wow, this is great, right? 9th positive week in the last 10. At what point does that train run out of steam?
Absolutely. I mean, I've always been a stock investor since I'm a kid. I used to have my uncle do it for me, and I'd pick the stocks, and he would buy them for me. But I would say that you might be frustrated as an individual stock investor because unless you're in these sexy 7.
I think everybody's frustrated, Rich. I mean, professional money managers, everybody's frustrated.
I'm not frustrated, and I'll tell you why I'm not frustrated.
No, but I think it's
understand,
easy to be.
but like if you're not studying the market, eventually this is going to this love affair with AI. That doesn't mean you don't own tech, but you also want to own consumer defensive. You also want to have healthcare stocks. I look at pharmaceutical stocks, and except for Eli Lilly, and they're trashed. And that makes me sort of whets my appetite to think about rotation in markets. So you have to think about how you're going to represent different sectors in your portfolio and not be overwhelmed by one because that money drains away.
Oh, I'm optimistic. Glass is half full here. I think there's a lot of opportunities out there.
I do. And I think markets are inherently optimistic until they're not. And we climb these walls of worry. This wall is a big one. And it's the biggest lesson as to why you don't go all in and you don't go all out. And listen, you can learn about money from anybody, especially in small towns. When we get back, we're going to talk about lessons from the Luling Watermelon Thump. When we get back, stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back. So I think it's 109 to 113 degrees in the shade. Even Brent, who's half frogman, has to agree that it's very uncomfortable and stuffy around here. So years ago, I mean, it's funny. I know so many people from Texas. Danny, you're the exception because you know about a lot of different parts of Texas and Texas history. But I talk to people that are born here and know very little about Texas history, the Alamo, small towns. They don't travel outside their small area. Like for Texas being this state of explorers, we've become a state of people that don't want to leave their little area. It's I'm sort of amazed. I mean, Brent does too. Brent's always on road trips, but there are some incredible places. And I came across Luling back in 2008, 7 or 8, by accident, and was driving through and saw that they have a watermelon thump. And for the most part, I've been going every year, and it fascinated me. So this watermelon thump, Danny, started in 1954, and I don't know. There's something about small towns in Texas to me. Like, I always say this, people always give me slack, but I don't consider Houston part of Texas. Brent's going to get me later.
What?
It's just not. Go ahead and drive and go to the small towns. That's Texas. That's the spirit of Texas to me. Here, I don't know. But I always, the current residents there, I've always been fascinated by it. The town had 5,500 people. Now I think it's closer to 7,000. Listen, Luling's gotten expensive. I mean, and I will tell you, there's this acrid odor that comes from the oil pumps. There's the metal grind of the railroad. That railroad comes through all the time in Luling, no matter what, right? This ear-piercing whistle, that fragrance of barbecue, and I know I am in Texas. And I was pretty much baked alive at the last thump. I was telling Brent, I went up to a watermelon stand and I had my ear on a watermelon, and a guy comes up to me and going, why is your ear on a watermelon? Is that a new way to pick them? I'm like, no, I'm just listening to see if it's boiling. It was, and I've gone years where it's hot. This year was a whole other level of hot. But I am also a firm believer that you can learn from anyone. You can learn from anybody you talk to, anybody you see in any town. You got to be an observer. That's how you got to do it, right? So I'm going to quiz Danny, Brent, about some of this because I want to see if he understands what this means. So I've compiled notes over the years, and I got a new one for this year. From the residents of Luling, as I asked them questions, and some of them look at me like, Yankee, why are you asking me a question? Listen, I've been here since 1998. Can I be adopted? I got here as soon as I could. Matter of fact, $100 billion profound shift has reshaped the southern U.S. as people flee to states like Texas, right? We're going to talk a little about that later. Here's one of the lessons I learned. Danny, you're going to have to tell me. I don't eat the whole chicken all at once, just a piece at a time.
What are you asking me? That's fairly normal.
Is it fried or barbecued?
I mean, I've never seen anybody eat a whole chicken at once. I mean, yes, it may be in one sitting.
I have done it in one sitting.
Not in one bite. I mean,
no, piece at a time. What I'm saying is this growing wealth, the things that people do is a step at a time, right? With us, it's the financial awareness of your cash flow. It's spending less than your household income. It's managing debt and savings, right? It's about investing. I don't go all in and come all out, right? So, you know, when people say stuff to me in Texas and they have a way of doing it, I don't have any idea what it means. And I'm sort of afraid to ask what it means, especially if I'm standing on their property, because I may not be there long. But I have to figure it out. And I'm like, okay, I don't eat the whole chicken all at once, a piece at a time. That could be dollar cost averaging. I mean, how do I relate that to money? Right? But taking baby steps, investing, paying yourself first. I don't know. I ask people about, listen, it's about money. Can you give me a lesson? And this is what I get.
I'm so glad you went that direction because I didn't know where you were going with this chicken thing. I mean, you talk about the watermelons, Texas. I was like, where's he going with this?
I'm all
this
over.
This shows you how scripted we are.
We're so scripted, we're unscripted.
I hope you guys are on your toes as well.
Yeah, listen. I ask about money lessons. This is what I get. Don't eat the whole chicken at once, just a piece at a time. And then you sit there and you scratch your head, and then you got to figure it out. Because what a Texan wants you to do is, you're a smart boy, figure it out. And then I figured it out. And everything takes place over time.
And then you have your Friday food segment.
That would be great. Who's eating chicken in Luling, by the way?
Everybody.
You're eating barbecue.
Barbecue chicken.
Well, I don't think they serve barbecue chicken at
I bet you can find it.
City Market, though.
I bet you can find it.
Oh, I'm sure you can find it. Probably in somebody's backyard. Now, this one you're going to understand, Danny. Don't owe nothing to nobody. I can see Danny getting a shirt that says that.
Man, hey, listen, I love that one, but I also love being able to use leverage properly if done right. I mean, that's the problem I think that we have, that so many people want to be debt-free, and I'm all for that. But you can use it strategically, Danny, as well.
The senior old folk in Texas, they don't like the debt.
Hey, I'm with you. I don't like debt either, like not one bit.
And the guy who told me this had a mouthful of ribs and a face devoid of several teeth. I wasn't going to argue with him. Right? And you got to remember, the meat falls right off the bone at City Market. You don't need teeth. You got it. You need cash, though, because they don't take credit. How many people have you eaten at City Market?
It's been years. Years.
You got to go back. What are you doing?
You've never taken your children there?
Nope.
It's an experience. It is an experience.
Listen, I don't like to go anywhere I have to stand in line for any extended period of time to eat food.
I get that.
But just don't do it. I don't do it.
I'm going to go with Richard on this.
It's worth it.
It's worth standing in line
We have 2 or 3 barbecue places very, very close to the house that are like written up in GQ magazine. I mean, they're fantastic.
Okay.
But
I'm done with the show today, everybody. Danny's on his own. See you later.
Who has time to go stand in line for 3 hours? Texas Monthly. I'm talking about, listen, GQ actually has a pretty good write-up on barbecue joints.
My head just exploded on air. Did anybody hear it?
Go Google it. Look at Texas barbecue joints. You're going to find Texas Monthly, GQ, a bunch of other places. But what I'm getting at is, like, I don't have the time. I don't have the patience. If I'm going to eat, I'm going to eat. And yes, I like good food. I love good barbecue. But I will go later and pick something up after the line has subsided, and just not going to do it.
Now I'm going to tell you.
It's principle.
If you just go on a Saturday outside of the Thump, you won't be on the line very long. It moves very, very quickly.
Yes.
Doesn't it?
They better have Chick-fil-A business model on I'm not dealing
Get
with
there
it.
about 11 o'clock before the regular crowd hits for lunch, and you'll be fine.
See, the places around here, you got to get here like 9 o'clock if you want 11 o'clock to eat. I'm not doing it.
I did go to Truth Barbecue. Amy and I did go to Truth Barbecue outside of
in
Brenham.
Brenham, yeah, that's good.
In Brenham. Not the one here in town, because
Yeah.
I don't count that one. The one in Brenham. Very cool.
Yeah,
It's
right
a
off
little small.
105.
Yeah,
Yeah.
very good. But I'm never going to forget the GQ recommendation. That's
Oh, shut it. You know where I'm going.
Rich Ross
Isn't
was
that
about to
where
get
you get your fashion ideas?
Not anymore. I used to, but based on the politics in that magazine, I'm not going there because I should be wearing a dress, Danny. All right, based on GQ, the best dressed man wears a dress. All right, now, the heat won't kill you until it does. And I'm like, okay. As I understand, in Texas, you respect the heat, especially if it's 113 degrees. But I thought about the Albert Einstein quote, Danny. Insanity is doing the same thing over and over again and expecting the same results. So if that current relationship you have with money is subpar, you're overextending it on credit, as opposed to what Danny said, where you're using credit in a smart manner. You're not saving for retirement. I sent Lance an article this morning that I think almost broke him. It's about how Gen Z just doesn't care about anything but sitting around and just letting things happen and let the cards fall where they may. In late stage capitalism, where we're not saving and we're not doing a darn thing. That is the definition of insanity. If you're not taking care of your body, physically, mentally, you're failing to continue to learn, you are going to burn to a crisp. That's the money lesson I got from the heat won't kill you until it does. What do you think, Danny?
I agree.
Me too.
I don't have a whole lot to add on that one.
You're still mad at me about that.
I'm not mad.
I'm just kidding. Hay is gold. That's another one I got. Hay is gold. And I'm like, okay. We have record heat. Hay becomes a valuable commodity in Texas, right?
Extremely valuable. I mean, you see people with their, they're decreasing their herds because you can't afford the hay, especially in a drought. I mean, there's been big problems previously where, being a farmer or a rancher is extremely expensive. And it's not, everybody thinks that, you're making a ton of money. That's not always the case.
GQ says you can get your hay at Whole Foods. Just so you know. So, well, doesn't it think about it? All of life comes down to supply and demand, right? So with the way the labor force participation rate is, you are in great demand if you're keeping up your skills, which means I'm going to make more money if I can keep my careers and build my human capital. We return. We're going to continue this. I might not be here with that look in Danny's eye, but one of us will be returning after this.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
You're listening to The Real Investment Show.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
We're having a conversation. I told my wife I'm never wrong. She said, you might want to examine that because in my experience, you're always wrong. Of course, she's right.
The Real Investment Show podcast. Same show, your schedule.
Because there's actually logic to this, right? So if you do logical math, right, you have an equation. You have the man right and the woman's wrong. The answer is the wife is right.
At realinvestmentadvice.com.
If you're both wrong, you're wrong. Not her.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell report, plus each day's radio show. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back. So it's all good. Danny said he'll meet me outside after the show. Meet me in the schoolyard. All right, we're going to continue our money lessons from Luling. I'll take small quality over a big stack of nothing. How do you like that one, Danny? I know everything's bigger in Texas, but I think there's an appreciation of quality and what's built well that I haven't seen in a lot of other states.
Well, I think you're just not seeing that anywhere, even here. I mean, just everybody wants to get the cheapest product as quick as they can, or the product, and then fortunately it ends up being, you know, if it's cheap, sometimes you get what you pay for. And so I'm with you on that.
I always try to tell somebody, like, you don't want maybe, and I got a little bit of this from the Millionaire Next Door. I don't absolutely want the cheapest thing. I may not even want the most expensive, but I want it well crafted and somewhere in the middle, and I should do okay.
Well, I think that's where doing your homework comes in. When you can find, I was talking to somebody yesterday about their auto insurance. I said, man, it's gone through the roof.
Yep.
And I said, well, let's talk about it. And I've had a lot of emails about that as of recent. I said, well,
homeowners, auto, right?
Yeah, everything just has gotten so much more expensive. So, you know, we're talking about shopping around and what they were looking for and trying to look at. And I said, well, you know, the cheapest is not always the best. We need to look at, you know, obviously we want something that's attractively priced, but if we're buying insurance, we also want somebody that does good with claims. It's not very good if you're going to fight for years trying to get money out of them if you actually need it. And hopefully you never need it. But, you know,
there is a value to customer service,
correct,
promptness, as opposed to just looking at price.
Or getting what you pay for in general, right? I mean, that's why we have it.
And you're right. We always want the best deal. But again, having the best deal, there's a great book. I read it years ago called Cheap. And it talks about the evolution of the U.S. consumer, how we eventually wanted more and more deals, right? And these big places like, well, where I was from up north, EJ Corvettes, but you also have bargain stores. But then it became, we got to go to China for cheaper stuff. And now we're in this issue where we don't want to be so dependent on China. But it all stems, even though people say it's corporate greed, it stems from us wanting cheaper and cheaper stuff as well. And then capitalism is going to find a way to capitalize on it. So the evolution of the U.S. consumer from wanting higher quality to junk crap is fascinating in this book called Cheap. I'm sure you could pick up the paperback for cheap. It's been around a while. But it was just fascinating, Danny, to show how we became more addicted to these kinds of bargains that we wanted. But then, I think when we say bargain, we're trying to find good stuff at a good price. But eventually it just became cheap stuff at a cheap price. Man, I remember, I know I'm aging myself, but did you have box fans? Brent, did you have a box fan?
We still have box fans.
I still have one in the garage.
Okay, but I'm talking about box fans, not the ones now you go and you buy them from Walmart.
Ones that were in the window?
Well, but they're plastic.
Yeah.
They're all junk plastic.
Now they are.
But when I was a kid, they were metal.
They were metal.
Weren't they metal?
I still have a
You can
metal
still get
one.
metal ones.
You can still get the metal ones? Where do you get
You
those?
pay a little bit more for them. But yeah.
I just don't see them when I go to like a Walmart or something. I don't see the...
they're circular now. They're not boxed. That may be your problem.
There's a circle in the box, but the fans themselves, the outer ring, the outer part, the grid, everything was metal.
Yeah. I've got one so old the feet have fallen off of it.
Really?
But I still use it.
You still love her, though. I'm kidding.
Just had to go there.
I just had to do that. I know. And now Brent's going to want to meet me outside after school.
No.
Everybody's ganging up on me. This is just like high school. Back at Lincoln High School in Brooklyn. The past has a place, but don't forget the present. And I was like, okay, past has a place, but don't forget the present. All right. So when I think about this, I think about when people buy stocks and then they have a bad experience with that company as far as the stock doesn't perform. When they sell it, they never go back to looking at it again. Like Microsoft is terrible, Apple was terrible, all these companies that were terrible, but realize companies are living and breathing, they change. But I notice when people sell something at a loss, Danny, they never, it's like, close the door. I'm never looking at that company again. And maybe it's an entirely different investment. I think you have to have an open mind for a company that hasn't performed well. Like, to me, what comes to my mind is Intel. No matter what, Intel cannot get out of its own way. But I always watch it because maybe there'll be a change in management. Maybe they will turn things around. I think Cisco's on that path.
Yeah.
So you can't, even though you may have a bad experience with an investment, it could have been your timing. It could have been management. It doesn't mean you can't look at it with fresh eyes, don't you think?
Yeah, I think that's a common problem with most people is that they feel like, hey, this has been bad. I'm never going back to this again. I've lost money. And things change. Like you just mentioned, management changed. I think that's a big one that we see, they can kind of right the ship and things actually do get better. That's a more attractive investment. So I always want to go back to like, why did you invest in it in the first place? There must have been some type of conviction. You must have liked it for one reason or another. And I think that goes with anything. I mean, I think we should learn from the past, understand what our mistakes were, document them, because I think in this age of information, it comes to us so quickly. It's so easy to forget, what were the reasons initially? Why did we buy a company? What were the fundamentals? Jot these things down. What was your reasoning? And the problem, I think, too, is that we get so emotional about these things instead of just going by the data and going by what and you've got to look at sentiment too. But I think our own sentiment gets in the way sometimes.
I think so. Now, I understand there are some companies that you may not want to own because there's a conflict that you have with them. Like there are stores I'm never going into.
Oh, there are stores I want. Yeah,
and I don't care.
My list. It's
I
long.
personally don't care if the stock goes up a bajillion %. I'm not owning it.
I'm not selling my soul to the devil.
Yeah. He's feisty today. I like him. GQ.
He's on
selling
point.
the soul to the devil.
Yeah.
He's on point.
Listen, man, I'm just trying to.
Yeah, you're right. You're right. I mean, I listen, and I will respect that. If there's a company that you feel it's not because you had a bad experience because you lost money in it, but is that there's something that conflicts with your, who you are and what you believe in. Listen, as long as you understand the consequences of it, I'm more power to you. I'm totally fine with that. That's a rule, and a rule's a rule, and I'm okay with it. What do you think, Brent? You okay with that?
I completely agree.
Okay.
Yeah, I'm with Danny. There's stores I will never darken the doorway of again.
And I'm okay with it. And they don't care.
No, they
they'll
don't
be
care.
fine without us.
Yeah.
That's perfectly fine. It's not like I'm making a big impact. But in my own, to Danny's point, I've got my own morals. I got my own situation I've got to deal with, and I don't feel right about it, so I'm not going to do it.
My list will be out next week for a small fee of
Danny's list.
you too.
So we have Danny's preferred list of retailers.
Yeah, I like that.
Yeah, just don't go to.
Pretty short.
You debut that on Wednesday?
I'm not going with his
Yeah.
magazine subscriptions because GQ, not doing that. All
Look,
right.
man, I'm just trying to relate to you. That's why I brought it up.
You-
I mean, I figured. I know you've been a lifetime subscriber.
He's going to scratch.
Oh, man.
You know what I did subscribe to? Backwoods magazine.
Oh, really?
Is that what is that? The cigars, cigarettes? What do
No,
they make?
it's Backwoods. It's all about like you're
manly
going to go
men
live in a
stuff.
hole.
Yeah.
It's good for a lot of wealthy on people too. You can fool yourself, but the pigs will still laugh at you. So, you know what I thought about here? Emotion. The greatest enemy, Danny, you should talk about is of investment and financial success. We are constantly plagued by overconfidence. We sell high, we sell low, we buy high, we hold on to losers too long, we sell winners prematurely, we create trends in our head that don't exist. You can fool yourself, but the pigs are going to still laugh at you. This one is my absolute favorite because I just stood there with my mouth open, and I'm sure about 30 flies went in there because I had no idea what that meant.
I'm curious as to the context in which this statement was uttered to you.
You don't want to know on the radio. All I'm saying is someone was a little tipsy and came up with that. And I'm
So
like,
did you just go around asking random people?
I did.
Sitting at tables,
and it was
excuse me,
almost,
sir.
And I almost got the same tone I got with the GQ from you. They were ready to beat me up. But
Well, I'm just curious.
No,
I wasn't ready to beat you up.
I know.
you-
I'm just kidding. Where's his sense
I mean,
of
if that's
going to
be the one that
Can I get his
does it.
sense of humor back? Where's my Danny?
Man.
Danny, where are you?
I'm here. I'm
Okay.
here.
Richard was traumatized in school.
I was traumatized.
Or in Luling,
school.
one of the two.
I think Luling was more cathartic for him.
Probably so.
I was the bully's greatest target in school. Yeah.
Well, as
It's
we
just
say here in
it
Texas,
is what it is, man.
Bless your little heart.
That's the one I didn't get. Bless your heart. Why didn't I get that? I could have turned that into a money lesson.
I'm just curious. Did you go around and just ask people at random picnic
I
tables?
did. I
or
said,
were you
what's
waiting?
the best advice you can tell someone in your Texas way? In other words, you learned it in Texas. What's your best advice? And these are what I got. And some of them amazed me.
Just write a book on it.
I could write a book on these. If I keep doing this over the few years, I bet I can come up with a really, really good book. All right. Guess we'll be back. We're going to be talking about other stuff here when we get back here on Financial Fitness Friday. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Oh, Red, I declare, I I plumb miss that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Rhett, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Nobody in Luling talked to me about annuities. Everybody was just too happy with watermelon and barbecue.
Did you have vodka in your watermelon?
That is amazing. And
Richard thought he talked to all these people. He was literally just talking to himself.
I do talk to myself a lot, but yeah, I do that. I'm doing it right now. Ooh, that's Floyd the Barber. Ooh, Andy. Ooh.
Exactly. See? He's like, man, I talked to all these interesting characters, but
it's like a
behold,
M. Night Shyamalan movie. He's really talking to himself. It's yeah. Listen, you got to talk to yourself once in a while, especially when you're dealing with people's money every day and emotions. It's like, oh my goodness. We have coming up in July. We're gonna have a really great mid-year forecast with Lance Roberts. Coming up is a Candid Coffee. July, we don't have it posted yet. 22nd. So you're going to want to be there. Sort of a wrap up of what's happened and what we think going forward. So I said to Lance, what do you think is going to happen going forward? He goes, how the heck do I know? But he will know. He better know by July 22nd. He will know. So this is going to be a great informative Q&A with Mr. Roberts. He'll satisfy you with his charts. Your appetite for charts will be appeased. He will be there to wrap things up because, again, as we talked about in the beginning of the show, this has been a rather strange year, hasn't it?
We should have registration available by the weekend on this thing.
Excellent.
That's what we're planning on.
Well, we always do get a big turnout when Mr. Roberts decides to grace us on a Saturday morning. So,
which is a rare event, by the way.
It is, because he's usually writing and cursing at his computer, just to make sure you're getting your newsletter on time. And so, again, we do this. We want to give you an idea, wrap up what's worked, what's not, what we think will work. Again, part of our job is to look at the macro environment, and it's not just about investing for today. Because we are not, believe it or not, short-term traders. We are long-term investors, and we will look for value in a market. We will look for and examine the economic conditions and the numbers and figure out where the puck is going to go and invest there. But since investors have a holding period of 1 minute, it makes it a little difficult. You want a good advisor who is looking at things bigger picture, longer term. And that's what we do. We also are, not to pat ourselves on the back, I think very, very, very competent financial planners. And what's interesting, there was a study that came out. It's an in-depth new report from BlackRock and the Bipartisan Policy Center. The study is true, though. Adding guaranteed income combined with a more aggressive asset allocation can generate an additional 29% in a typical person's annual spending power from accumulated retirement savings. That's excluding Social Security. On the surface, this makes sense. If I have an annuity means check for life. I'm getting income in, Danny, right? I'm getting money in. That is a very conservative investment, even though it's designed to mitigate longevity risk. That, therefore, in my variable asset portfolio that I may not need to touch for a very long time, I can afford to be more aggressive. Because maybe I don't need to tap it as often. Maybe I don't need to follow a withdrawal rule. And if I do, I have a client that has quite a bit of pension coming in and guaranteed income. His withdrawal rate's 1% from the portfolio. So I said to him not too long ago, I said, you can be more aggressive when the time is right in this portfolio because you don't tap it. It's got a longer term timeline for you and your children. And again, that doesn't mean taking unnecessary risk. It just means that if I've got on one side of the fence all this guaranteed income coming in, and I maximize my Social Security, then I have more flexibility to spend and manage my withdrawal rate on the variable asset side. Don't you think that makes sense, Danny?
No, it does. Lance and I talked a little bit about this on Wednesday, this exact study. And, I think it's very important, though, to understand exactly how the annuity fits, how you use it.
Sure.
Somebody asked, how do you eat an annuity? And really, do you buy it all at once? How do you structure these things?
Good point.
And I think that the big picture is it needs to be planned for. And one of the big disservices we talk about this frequently with any type of insurance is that it's sold, not planned. And that's where I think people get into trouble. But it does allow this, just like we talk about Social Security, when you take this properly, it eases the burden on a volatile or a portfolio that's going up and down, but it does allow you to take on a little bit of additional risk potentially in the right environment. And I think that's the one thing that needs to be understood, right? And so understanding the math of loss, how it works, what happens, it doesn't mean you just go throw caution to the wind and, get very speculative, but it will allow you to not use that old rule. What is it, Rich, that you take your age, you take 100, subtract your age, that's how many bonds, how much in bonds you need.
These rules
so
of
broken,
thumb are
right?
just terrible.
Yeah.
It's just terrible. The most important part of this from a conceptual perspective is guaranteed income comes in no matter what. And therefore, the ebbs and flows of my portfolio, I am not as distressed or dependent. There are studies that'll show people with guaranteed income will spend more money. Because, listen, if I know I'm getting in $2,500 a month, I'll spend it all because next month I'm getting another $2,500 versus, oh my gosh, look what the market did here. And I have to go ahead and worry that this year the market's down. Look at last year, Danny. Now, in our plans, nobody was affected because we've built in these kinds of tests to look at what ifs, and we feel that with valuations, markets are going to be rough over the next few years. So we didn't have anybody affected. But even psychologically, even though we told investors, our clients, hey, you could take your withdrawal rate, no problem, they still wanted to cut back because psychologically it didn't feel right emotionally to tap the account when it was down. And again, we weren't down anywhere near as much as the market, but even so, if I have a guaranteed income coming in, and for people who did, they said, listen, Rich, I'm going to cut off my withdrawal rate this year. I don't need to worry about it. I'll make do. But if I'm depending on everything or all my retirement income from variable assets, I just can't mindlessly take 4% a year. That's a fairy tale. I have got to monitor my withdrawal rates and perhaps adjust them, create guardrails around when I can take more, when I maybe don't want to take more, but I take about the same, or do I want to take less? Do you remember in the height of the COVID storm, all these studies are coming out about the 4% rule really was 2.9% rule? So think about you having to tell one of your clients, listen, yeah, you were taking 4% this year. You're going to be less than that. Actually, I think it was 2.5% rule. So, or for the most part, half of what you would usually take. Now, that sounds easy in theory, but what do I have to do in my household now to take out half of what I was taking before on a lower balance?
Yeah, I think that's going to be really difficult for a lot of people. And that's the problem, is that we've lived by these old school rules of thumb for so long that the financial media has told us this is how it should be done. And it's not accurate any longer. And you know, we've seen that, especially in this age of lower interest rates, where how did you get to that 4%? Now, it's probably getting a little bit more achievable, but how long do we have these rates here for? I mean, if it's for a long time, well, then maybe, hey, if we can get cash at 4.75, that's great. That's an easy thing to do as long as everything else is ticking up with it. But at the end of the day, we have to think about this, is that it's only going to move with inflation. So, you know, we can have higher rates and yields while that's nice, but, you know, we have to think of what are we giving up? We're always going to give up one thing for something else. You know, and Lance talks about it all the time, right? Safety, liquidity, flexibility, growth, reinvestment risk, all of these things that we're going to face with any of these types of things.
You can't have it all, right?
That you have to back into to get that 4%. Obviously, dealing with variable assets, it's got to be pretty nimble. And I think
it's
that's
variable. You need to be flexible.
correct,
right?
which is a big reason why, like, if you have a financial plan, I'd prefer you break down those numbers.
Absolutely.
Like actually break them down. What is your basic living expense to keep a roof over your head, fed, clothed, right? All the necessities. Then let's talk about all the things you want to do. You need a new car. How often are you going to need it? Can you delay it for a year? Probably so. I mean, some cases you can't. You want to travel, gifts. I mean, we start really putting these in buckets, and all of a sudden we realize there's areas. And what I find, Rich, is though that people intuitively do cut back.
They do.
In times of stress or, you know, bad economic cycles, market cycles. A lot of times people do a really good job of this. And they don't take that 4%, but there may be years they take 5. There may be years they take 2. And that's okay. But understand how that impacts you and your plan overall.
Absolutely. So keep in mind, we got some important numbers coming out, 7:30, PCE inflation. We're going to see where this number goes. This is the number the Fed looks at, remember. So keep that in mind. And again, you may have a long 4th of July weekend. Be safe. Keep all your extremities. Have fun. Be grateful where you are in this country. And we'll see you again next week. Thanks for tuning in, everybody.